Good afternoon, good morning, wherever you're at. This is my weekend update for weekending April 25th, 2025. A lot of stuff to go over here. Looking at the overall market for the week, we had a mixed performance on Friday, but NASDAQ outperformed due to Google earnings beat. Interesting, Google's earnings beat was due to a $8 billion gain on an investment, and I think that was an investment in SpaceX. So S&P finished green yesterday. Dow and Russell lagged for the week as there continue to be mixed messages out of the tariff situation with China. My belief, and I'm going to do a podcast this week, is my belief is that China continues to lie. They have been in contact. They are trying to maintain the public perception that everything is fine in China when in fact we know it's not. So I'm going to do a podcast about that this week. Looking at the overall market, some of the things that I keep an eye on are the 10-year yield. We've got the 10-year yield going back down. That's fantastic. So people can stop freaking out about the fact that, or they're concerned that foreign countries were going to be sellers of U.S. treasuries. I believe I saw this week that over the last month they've actually been net buyers to the tune of I think over 100 billion. So I'm not seeing the weakness there. Also continue to watch the news flow out of the tariff situation. Before I get into charts, let me look at some of the. I want to show you how bad it is right now. When I say how bad it is, like how negative the market is. When we look at, and that's across the board with also with just some of the macro measures, University of Michigan, some of the Empire Fed. These are surveys, but they're very small surveys. They're not um, where they're going out and talking to thousands of people. It's a very small subset of the population. So it is not always, I don't always look at it like it's indicative of the overall market for that sector or the economic outlook for that sector. I actually look at what is the, for all the sectors across the board, regional sectors, right? Michigan, um, uh, there's 8 of them, I believe, regions. I forget the word. Anyway, taking a look at some of the negativity. So this is current readings. Consumer sentiment down. 5 to 10-year inflation expectations are up. Now, right here off the bat, we should look at these and go, well, that's garbage because that's 5 to 10 years. So nobody can predict inflation out to 5 to 10 years. So remember, something that I harp on all the time is people who straight line extrapolate. We'll get to that with EOSE later, which is they see a number and then they don't adjust. They believe that, well, I'll take this trend and I'll just extrapolate and extend it out for this incredibly long time frame. It's meaningless. It really is. The fact that people think inflation expectations, are highest level since 1991. Um, we've got to realize something though, that the rate of inflation and the rate of the interest rates themselves have been kept artificially low for 2 decades. So some of this is a reversion to the mean. It's not entirely all of it, but keep that in perspective when you hear about inflation expectation. Here's another one. This is Goldman Sachs. These are all courtesy of Zero Hedge Private Client. This is Goldman Sachs Business Optimism Tracker. Okay, obviously not very optimistic, but again, it's not as if we're seeing a huge contraction and just drop below the zero line. So I think this is for me more of just indecision and concern if the tariff situation lasts longer. This is the dollar index, and we're looking at the dollar getting stronger, not weaker, which is interesting because everyone said that the dollar is going to get weaker. This is what is expected. They think inflation rate 6 point. This is the highest rate since 1981 in terms of what is expected. So Do I think that we're going to hit 6.7%? We might. I hopefully be temporary, but we might just do that. Looking at earnings, these are the S&P 500 EPS estimates. Yeah, they've gone down since the beginning of March. Well, that's okay. It's relative to the chart. I mean, what did they drop? 2%? Big deal. Okay. Um, what else do I have here before we get in charts? Here we go. This is the bull bear index. So we've had AI, investor sentiment has been bearish for 8 straight weeks. So that's longer than 2008. It's longer than 2022. It is, again, due to both the mainstream media not reporting any good news, as well as this tariff situation that we're in. And then also, this is hedge funds. This is a long short ratio. Um, it's in the 1 percentile over the last 5 years. That's how negative they are. So across the board, I think it's pretty easy to see that a lot of the indicators or a lot of the measures that we use to measure some of the plumbing underneath the market is negative. Uh, I like these types of environments because I like to buy in them. However, before I jump, you know, in and do that, let's take a look at the S&P 500. You can see that we broke through here into this gap, this high here, which was 54.99.53. I've been calling for a close above 5,500. We got it. Now, here's the problem with jumping in and going long here. There's a number of issues. If you look at my chart, this red, this orange, and white, okay? The white is the mean, okay? This is 1 standard deviation over the last 45 days. This is 2 standard deviations. When I look at a chart, I like to see what price has been respecting. Well, it's been respecting the 1 standard deviation line. So I think we've got to be cognizant of this could be a high probability or an area where there's going to be some technical resistance. In addition, from the current price up to 5,800, we also have the 200-day moving average sitting above us. So um, I think that what's going to happen is if we get some deals coming in, whether it's India, Japan, as some of those deals start to be finally signed and finalized, we get details, it will provide a framework for the rest of what the market will take as a framework for the rest of the deals coming in. And of course, I just got done talking about the idiocy of straight line extrapolation. So every deal is going to be slightly different. Um, yes, I'm cautiously going to go long on Monday, depending on how we open up. But this is a significant technical break. So we have on the NASDAQ, okay, let's pull up the futures market. We have the same thing, a break level, no gap, but we have a break level. And unfortunately on the NASDAQ, we also have 20,000 above us. We have the even number of 20,000. We have the 200-day moving average, as well as the point of control, as well as price has been respecting a 1 standard deviation move to the top side. So we are in an area of rejection. If we get deals, this will punch through and we can make new highs. If we don't get deals soon, I'm saying in the next 2 weeks, then I could see this roll back over. Okay. Right now is not a time to be courageous, though, in my opinion. Now is not the time to be jumping in with both feet and saying, I think it's safe to get back in the water. It is not. I'll give you a perfect example. Let's look at Tesla. Okay. Tesla looks like what a great day yesterday. Yeah, it is a great day, but let's take a look at a couple things. All right. We've got the 200-day moving average sitting right above us at 291. I've got the number 300, the even number, right? You know how I'm a believer that even numbers are a big deal in the market. We have 300 right above us. So there's 2 resistance levels. What else do I have? I have a 2 standard deviations right at the 200-day moving average. That's a huge deal, right? Why? Because as price approaches a 2 standard deviation move, either to the top side or downside, it becomes less probable that move will continue to extend. And so we're fighting against that too. Am I ready to jump in Tesla? No, I am not. I will wait till we close above 291 and then I will absolutely take a look at it. TLT, people, freaking out. Oh my gosh, interest rates are going to go to the moon and TLT is going to get crushed. TLT is the inverse of the 10-year. I think it's a 10-year. 20-year, 20-year rate treasuries. So if you believe that long-term rates are coming down, then you would be a buyer of TLT. I do believe that. So that's why I opened an opening position months ago. I still have dry powder, and I will wait for this break here. To give an idea of how far this thing can go, step back and look at the weekly chart. We are way down here. Okay. This thing has been as high as, back in COVID times, up 172, almost a double. So I believe rates, longer term rates are coming down. Looking at, I did open a position in Bitcoin, looking at the daily on it. We got in off of this break here. Actually, we got in off of this break here of the 930, this level right here. Okay. So we get in and sideways one day, and then we're up. We're up against this resistance level now, but we are using IBIT instead of Bitcoin itself. And you can take a look that IBIT is just a Bitcoin ETF. I think that we could have some good news or some good press flow over the next couple of weeks. Last week, banking federal regulations were removed from the banking sector as it comes to them doing business with Bitcoin and with Bitcoin. So I think that's going to be a positive. So, but we're in it, obviously, catch momentum. Now that we're up in this area, we got to punch through, but we are along that. I closed my gold position, I think on this day here. And so I have no interest in gold unless we pull back a little further. I may take a look at it. EOSE, we've got earnings coming up, and as you can see from the chart, we did get in here. Nice pop, retest. So a lot of times this happens. You get a break and then a retest of the break level, which is what it did, right? Retest the break level, and here we go. The good news is we closed above this high, 417 high, which was 521. We one-ticked it. That's good news. We've got this over here to deal with. This resistance is not major resistance, but it's at 528. Okay, so 528 is our new area that we need to break into. Once we do that, we are going to be in this range from 664 to 528. I teach my members when price enters a new zone, it will shoot to the middle first. And so I think we could get a scale next week at $6, 584 to 6. And obviously it depends on their news. We had some good news this week, as it was explained to me from the company that supplies felt to them, that they were told that they would, EOSE would tell them when they are starting to ramp up, and they got told that. So that's good news. I still think EOSE, I think the gamble for me and why I went in was not only technical, but I expect good news flow. I expect there to be commentary on the conference call that they have had demand that has exploded, inquiries that have exploded. Whether or not that's enough to move the stock out of this range, um, I don't know. People have asked me, what will it take for the shorts to cover? Will be a certain price point. In my experience, shorts cover typically for two reasons. Number one, there's a new data point or a news release or something that comes out that materially changes their basis or their thesis. I don't find that the current shorts in the EOSE, they don't appear to me very smart. So what I think they're going to do is they will cover only when we see price acceleration. They're not concerned about a stock just sort of stepping itself up in price. What they'd be more concerned about is if price starts getting squeezed. Now, EOSE in the fall, remember what I said when we were way down there at 240, 260. I said, what we need to break out of this zone, we need two news releases. We need the DOE. We got those. They did 3 news releases. So that tells me whether they intended to or not, they know that it works. So meaning timing of news releases and attempting to squeeze the stock. I hope they do that this time. I hope they squeeze the stock and they can accelerate it quickly and get some of the shorts to cover. Um, I still stand by my $15 price target for the end of the year based on all the data that I know. So still bullish. I want to see it close above that 28 level. Uh, that'll tell me we're in this zone finally. And yeah, it looks good. ENVX. NFX also curling up. You know, this is a level that's been tested multiple times. This $7 level. It is simply a an overhang that until it breaks through with force, I have no interest in going long. Also, we've got earnings coming out, and we'll have to see what they say. If I didn't, I'll be honest with you, if I didn't have a recent history of these guys stepping on, I mean, crapping their pants the next day after they do their earnings, I would be looking long here on a break. I just don't trust the communication, and it bugs me that I can't trust the communication, quite frankly, out of it. Um, so yes, NFX right now looks like it wants to break through. I have zero desire just because of recent history on news releases. PCT stuck at that $7 range too, but what we have here, if you look closely, what we have here is a pennant, a flag formation. So I am looking to get long this when we break through this level. BYON, uh, their CEO is a complete, and he just lacks integrity from in my interactions with him. He's this company's going down even more so. He's not going to show up for the Spaces call because what is he going to say? I'm a great CEO and don't pay attention to my stock prices that are hitting new lows, and don't pay attention to the 4 different times I changed the business structure of just Beyond itself. And now he's back with this flag issue. Look, I have, there is no reason whatsoever I would be personally ever invested in this company. I would never be invested in anything he does because I find him to be dishonest in his communications. So that's my position. Um, and unfortunately, for those people out there listening to this that love Marcus Lemonis, uh, I've been right. The share price has validated what I've been saying. I don't care what type of sunshine and rainbows he blows up investors' rear ends. Okay. The record clearly shows he is a wealth destroyer, not a wealth creator. So if you want to invest based upon the fact that somebody was on TV and they say the right things, then you will always lose money. That's it. So I am would love to short. I'm gonna short it, and I'm gonna enjoy shorting it down to where however low it goes. It's just a terrible. It's a terrible business with just a completely incompetent CEO at this point. As is vastly different. Okay, when I look at least from operating history, PCT CEO. It is vastly different from what I see with Mr. Joe from EOSE. Okay, it's just a different feel from these guys. I believe Marcus Lemonis cares much more about his image and what he does, what he says, and how the public perceives him than he does about these share prices. And I think that's pretty evident. So you can save your, I don't care. You can send me hate text. I don't give a crap because uh, the share price has proved me right. So, and everyone that says, yeah, but down the road, if he does this, okay, you keep playing that game. 1 out of 100 will turn out. I got 32 years of experience. That I am saying that if I had clients, I would not touch these companies with a 10-foot pole based upon 100% based upon the lack of communication and then for what I think the lack of honesty coming from the CEO. Let's see, what else do I have here? Looking also at uh, Dollar Tree. We were looking we were looking to get long, then it reversed. Now we tried to get short, but thankfully we didn't because I think what we're getting here is a break and a retrace on this. So other than that, that's about all I have today. I'm going to do a longer call or a podcast this week on the entire China tariff situation. I want to be clear what I believe is happening. I've been pretty clear and also been pretty right. That's a fact point, a data point. That's not a, hey, look at me, I'm so smart. That is saying, hey, thus far, what I've put out there has been correct. So perhaps there's some validity into listening to my opinion on this. I'm not going to be 100% correct, but I've done it. I've done a lot of business. I did a lot of business. It's been a while. I did a lot of business in China in the 90s, investment banking deals, tech, and they're wonderful people. But as a preview, their culture is entirely set up to cheat and steal technology, product patents, everything. It's how they built their entire economic base over the last 20, 25 years. If that comes to an end, which it should, because I don't like cheating, then, and I hope it does, because it's costing our country and the rest of the world's countries a tremendous amount of money. I think if that can be rebalanced, I think we actually have a shot at getting into a better fiscal position for the rest of the world too, not only the US, but I'm going to go into that in more detail. Other than that, let's see. I have got, I guess for now, uh, I am not going to go long on Monday until I see how, even though we broke through the 5,500, until I see how Monday morning reacts. Are we going to get follow through? It is a very, I'm going to tell you guys this, it's a dangerous area. 5,500 could be just as easily rejected. Just because it wasn't rejected on Friday doesn't mean it won't get rejected on Monday. And so could it be a bull trap? Yeah. Could be a bear trap too. So I'll have to wait until price tells me which direction is intending to go to on Monday. I could still get my face ripped off, right? It could go in my direction in the morning, reverse, and I get, whatever. That happens with trading. But I think, as I showed you in the beginning part, I think the market's overly pessimistic. I think everyone's overly pessimistic right now. And so those are usually, those time periods are when I try to be looking at buying. When the overall market, the expectation is crappy, when the professionals are in a bad mood, all of it. If he's able to sign any deals, and I believe he will, this market is set up to absolutely thunder to the top side. It is the right now investor sentiment, both professional and retail, is so bad that any surprise, I think, is going to catch a lot of professionals with cash in the sidelines, and they're going to have to jump in and chase. And then we'll short it when it gets higher. So I hope you all have a great weekend, and I will look forward to talk to you guys next week. I am going to do an open session, live session on Wednesday of next week. And so I'll put an invite out for that. And as always, you can find me on Twitter, Mr. Not Advice, and you can also find me at my Discord as well as on my website and my podcast. So anyway, have a great weekend. I will talk at you soon, and stay safe in the markets. Remember, first rule trading, protect capital. Thank you.
They ain't got no muscle, no hustle, no backbone. I stand alone, not tripping, just saying I'm different. Ain't hanging on to the coattails of the next man. Passport in my left hand, thinking that you are next. Heck, oh, you ain't holding your breath, man, cause I'm out here, I'm hungry. I don't play around, trust me. Ain't had as much drive since my Honda Civic got rusty, and my girl said that she loved me. It's funny, just thinking back, study hard for that 9 to 5, like I thought that I should be good with that. It was dreaming, still dreaming. Spotlight on me like Willie Beamen.